if you're not taking advantage of all of the opportunities that you have as a real estate professional, you're missing what's going to be ultimately the big win at the end.
Welcome back to the Real Producers Podcast. I am your host, Remington Ramsey, and today we have tennis champ, rock band champ, a handful of other things that Greg is not known for, but also very talented in. But what Greg Kurzner is known for is ranking number one in sales in the Atlanta market for real estate. Today, we're going to talk about investing in a real estate. And you've got a subtle tribute for those of you watching to Duke University there in the background, it looks like.
Yeah, no, not Duke, but close. Different colors.
Clemson colors through and through. You've got the T-shirt on. I love it. You're a diehard.
Yeah, I'm all in, babe.
So, Greg, we're gonna jump in. We talked in the pre-show about your structure around real estate, and when people hear number one, they think, "Man, that guy sells a lot of homes." We've interviewed a couple number ones on this podcast, and what I found is everyone is built differently. And just in talking to you, it doesn't sound like being the number one realtor in Atlanta is necessarily built the same as Indianapolis or any other city. Can you kind of talk to us briefly about your current makeup of your sales and your team and what it looks like?
Yeah, and so we're number one pretty much every year in units. We are generally not number one in volume, which is where you want to be. Obviously, if you could sell one property and have the volume, that's a lot easier than selling hundreds. But our niche is different. And so where we typically have been working is on the lower end of the price spectrum, working with corporate purchasers primarily and sellers, and helping a lot of these national institutional groups build their national rental portfolios based out of Atlanta. So it's a niche business. And as you mentioned, a lot of top producers have built their businesses differently and have grown them in different ways. And that's how we've approached it. Is to focus on that sector. And it has its challenges, but it also has its rewards. And again, that's one of the nice things about being in the real estate industry is that you can grow your business in a number of different ways and be successful.
Well, you've been here for 30 years. You've been in real estate for 30 years and over $1 billion in transactions later. Do you remember what it was like when you first got in?
I really do, because I always have a saying. There's several sayings in real estate, and most of us will appreciate it, but we wake up every morning unemployed. Mm-hmm. We're 100% commission people. You don't get up, you don't work, you don't eat. And that's still the case today, even though, we've grown our business in a way where it's a lot more predictable. You still have to get up every single day and go to work. And so I do remember it because there are times where you struggle, you have to pivot. Right now, in the last 6 to 8 months, a lot of people have had to reinvent themselves or kind of figure out how to redo what they've been doing, because what's has been working really easily isn't so much anymore. So yeah,
sure.
Every single day, I think everyone would echo that same sentiment.
Well, I think you mentioned before that your current makeup was a transition from what you were originally doing. Like when you first got into real estate 30 years ago, I don't believe you were working with investors. You were selling homes one at a time like the rest of us. So what were those different transition periods of times? Were they dictated by the market, 08 and 2000 and crashes, or was it different things that transitioned you from different parts of real estate?
That's a great question. And that is probably one of the most important parts I think that people might take away from this is where I was. So I started as a management consultant out of graduate school, hated travel. After a year and a half being on airplanes, I'm like, I got to find a job where I'm not going out of town except on vacation. So real estate was it for me. I started in commercial real estate. I did that well for a while. And then I had a developer I worked for who ended up going bankrupt in the late 80s with a savings and loan crisis. And I had to get a job. And residential real estate was really the only option for me. So I went in and joined a company and just started on my own. took leads from them, did everything a new agent would do. Got to a point where, I could afford to have somebody do the things I didn't like. So I brought an assistant and then I tried to grow a team. But the transitional thing for me, and this is the real important part, was I had been doing that for a while. And I kind of said, you know what, I'm just tired of it. I don't know that I want to do it anymore. I have a college degree. I can go work for somebody, or I'm going to make this work for me. And what I liked about commercial real estate was you get the client and then you get the business as opposed to the other way around. And so I said, if I'm going to stay in residential real estate, I have to figure out a way to have a stable business. And so I had a friend who was doing foreclosures for Fannie Mae. They had gotten into it by accident. And I said, okay, give me the contact person. Tell me who it is. And I wrote a script. I called them up and I spoke to a senior vice president at Fannie Mae. And I'm like, I want to sell foreclosures. They hung up on me. I kid you not. And I remember my hand shaking because I remember that was sort of that moment at the point where I said, okay, well, I'm going to get out of real estate. I'm going to do something else, because if I have to argue over, an inspection amendment or who gets the refrigerator or whatever, I'm done.
Yeah.
Couldn't do it. And 3 days later, I got a call from Fannie Mae and the guy said, hey, I understand you want to sell foreclosures. Okay, I'm going to give you 6 and we're going to see how you do. And I never looked back.
Wow. You say you remember your hand shaking. Was that out of nerves and anxiety or frustration?
It was, I think I had said this was kind of a moment in time, one of those epiphanies where if I can do this, I'm going to do it. And if I can't do it, then I got to do something else. And it was really at that point where when they hung up on me, I'm like, I thought that was really going to work. And
that was the one. And
yeah.
It was, automatic shutdown.
Yeah.
Well, I've said it before. What I love about real estate is all the different ways you can make money in real estate. Real estate is the largest trade organization in the world, which tells me that we're not all doing the exact same thing, because there just wouldn't be enough pieces of the pie, but there is enough pieces of the pie. And what you found your niche in is something that I believe is one of the most understated opportunities for most realtors. And it sounds, I guarantee there's people who will be listening to this that are currently, or were just in the state of mind that you're in, which is this right for me anymore? Especially with where the market is. There's not as many deals for everybody. So I'm sitting here twiddling my thumbs. Hopefully I'm not doing that. But if I am, and I'm trying to consider what my next step is, your option was getting into foreclosures, ultimately investments. It blows my mind how many realtors out there don't utilize their knowledge of real estate to personally invest. Right. And so I'd like to talk to you a little bit about that. When you're working with, well, first of all, what are your own thoughts on in your own personal investments and your team and people that you're coaching whenever they talk to you? If I'm a realtor, should I be investing in real estate?
Yeah, I mean, one of the things that I've found is that if you're not taking advantage of all of the opportunities that you have as a real estate professional, you're missing what's going to be ultimately the big win at the end. We all want, and everybody on this podcast is a top producing agent. So they are making money. They have a successful business, and you can get caught up in that. And that's plenty good. But what you want also is the ability to have that financial freedom that your hard work has provided for you. And if you're not taking advantage of investing with the capital that you've got, you should be, because you're the expert, right? I mean, think about people that want to invest in real estate that don't have the access to information, don't have the experience, the negotiating skills, and the opportunities that come as a real estate professional. So that's one thing we talk about all the time. And that's one thing that I've tried to do throughout my career, is to say, okay, what's next? How do I expand out from having a successful sales business? Because, I'm on the end. I've been in this for over 30 years. So there's at some point where I don't want to maybe go out on appointments and again, or I don't want to, throw buyers in a car or whatever anyone ends up doing. I want to have more of that passive income and wealth build. And that's one of the things I talk about with agents all the time.
All right. So I hear this and they hear it and they still don't do it. Why?
Right. Well, if you listen to Tony Robbins or any of the other folks, it's about limiting beliefs. Bottom line is we all have them. The people on this call have been able to fight through and change those beliefs in a lot of ways because they're successful to the level that they are. But even so, we all have limiting beliefs. I don't have enough time. I don't have enough money. I don't have enough experience. I don't know where to start. And we have to fight through those, and we have to kind of reshape those limiting beliefs to say, yeah, you do have enough time. You do have enough money. You do have enough experience. And whatever it is that's holding you back, you have to kind of break through that. And I think it starts with a plan, right? So you say, I know I should be investing in real estate, and whatever that ends up coming after the but is what your limiting belief is. And you have to talk about getting through it. Now, a lot of times, everybody on this call has probably dealt with personal, coaches. They're very good on training. They understand all of the things they need, but they don't go get the same kind of information or help when it comes to their individual investment needs.
Yeah.
They know how to script to convince somebody to hire them to sell their house, but maybe they need to have a coach that says, listen, you need to put this money away. You need to go find an investor, find him a property, throw your commission in as a minority percentage of a deal. There's lots of ways to get started, even if you're not.
So let's do this then, because I'm really excited about this this specific area that we're talking about. What are the main, because you're doing this at a high level, I guarantee that, the last 2 years, you've had plenty of people coming up to you asking how you did it and how to do it, and they're still not doing it. So you mentioned limiting beliefs. What are the main limiting beliefs that you're hearing? Is it that I don't have enough money to get started, and if I do, I'm not going to make the cash flow? What is it?
I think a lot of times, especially with higher producing agents, it's I don't have enough time. My business is taking all the time and energy, and that's where I make my money. So, to take time off to go invest or find a property or whatever, that's taking away from me adding income. So that's the biggest one. And then again, for those maybe that are, got kids in college, have big mortgage payments, going on big vacations. It's like, I don't have, whatever they think they need $100,000 laying around to go buy a property with. So,
all right. So time is the big one. And then cash, specifically enough cash to get started. What is your answer to time?
Well, I think time comes down to budgeting. We're all very good at to-do lists, but some of the most successful people in the world, they time block. Yep. And a lot of these folks that are on these calls are familiar with what I'm talking about, right? Don't make a to-do list and try and get through it. Block out time for things that you want to get done. You have time for your hobbies. You have time for your family. You have time for your business. Block out time to invest. And it doesn't take as much time as you think, especially if you're very methodical about it and you have a plan. So
no doubt. What's interesting is like a lot of people who are working desk jobs and get into any type of entrepreneur 1099 situation where they're not being told exactly what to do when they do it, they're not punching a clock. They get into this business or any type of business because of the freedom, right? But what I found is once you get into the business that has freedom, the ones that we glorify are the ones that work it like a 9-to-5 or the ones that work it like robots. Right. So when you say time blocking, I think a lot of people think, okay, well, I'll just, what time blocking is I section off 10 to 12 for this amount or for this thing that I'm doing, which is lead generation. And then from 12 to 1 every day, I budget time for lunch, because if I don't get that, I get super cranky, right? But then once they get into their week, they don't abide by that because they are so bought into this freedom that they've earned the right to be in because they're an entrepreneur. And what you're saying is so true. I think to go a step further, you have got to be a slave to your schedule. If you're going to truly time block, and if you're going to truly say there is going to be a 4-hour period that I'm going to learn the investment business, and it's going to be from 1 to 5 on Friday afternoons, and there is nothing that can penetrate that time because it is that important to me for my future. And people don't define that. And so it's just loosely defined, and then it never happens.
Right. And I absolutely agree with you. And I think you could apply that to anything you want to do. If you want to get better at golf, you want to learn a new language, you have to focus on it and you have to commit to it. And as you mentioned, the limiting beliefs, you have to believe you can accomplish it, but it also has to be important to you. And I think the problem with growing income and passive income and wealth is that it doesn't have to happen tomorrow for you to make the mortgage payment. I need to go on this listing appointment because I need this cash to pay my bills. And, oh, well, if I invest, I could do that next year or 10 years from now. And the problem is that you're like me, 30 years into the industry, you have to start back early and start building on that so that you get to where you want to be when you want to be there. So it's discipline, but everybody on this podcast, I'm sure, has the level of discipline that's enabled them to be as successful as they are. So applying this to building their own wealth and passive income is something they should be pretty comfortable with. They just have to say, yeah, I really want that, or no, I really don't.
What are the different types of investing that I can get into as a realtor? If I'm a realtor doing 5 to 10 million a year and I'm comfortable, depending on what market you're in. If you're in California, you're hearing that and you're like, there's no way I could even live on that. In Indiana, you're living like a king. Right. So I understand this is not one size fits all. But if you're a realtor that is comfortably living and you're bored, or you're looking for the next thing, or you're finally deciding to invest in your future, what are the different options that I have to get started in when it comes to investing in real estate?
Well, the lowest common denominator, if you will, the one that's the safest and the easiest is to buy homes that are rental homes. Because you don't necessarily have to buy them at deep discounts. They're going to, as long as they can cash flow with a rental tenant in them, they're going to appreciate over time. And, if you own those 10, 15, 20 years, they're going to be worth a lot more than what you paid for them. And you're going to continue to create income and the tax savings and the benefits that come from rental property. There are ways to get involved with those. If you don't have a ton of money, you can put together, find other investors that are willing to do that. And you can, get minority ownership stakes in those kinds of things by putting your commissions in. Those are easy. A lot of times what we've also done is you found an opportunity to add some value, and you can buy a property, renovate it, and flip it, and you make cash doing that. Those are the kinds of things, because agents already know about inspections. They know about negotiations. They know about what things cost to repair. So they have all of the tools in the tool belt. Sometimes it's a matter of putting together a team that can make all of that stuff happen. But I think a lot of times it's just fear. If you've never owned a rental property, there's a fear. What happens if I lose a tenant? What happens if they burn the house down? What happens if, I can't fix the air conditioning system and whatever? Those are the fears. Yeah. And once you and the fear, the ironic thing is once you do that once and you realize, oh, the world didn't end. Right. Then you have this kind of, okay, let's do more. And then you have to actually be cautious not to make bad decisions because, hey, there's so many opportunities out there and you just got to, you got money burning a hole in your pocket. So
you just remind me of a funny saying that I tell my kids all the time, or I just say to them is, my question is, did you die? That's our mantra, but did you die? Because we tend to make big deals out of everything. All right. Well, okay. So time is the first one. And then we slowly transition into cash. Now we're talking about having enough cash to get involved into the investment game. And I would like to save a little bit of time at the end for higher level thinking, right? So like if I'm listening to this and I've already got 10 doors, I've already got 20 doors, I've already been there, done that. You're even on another level there. And I'd love to give those guys a bit of encouragement, hope, and excitement in the industry. But if cash is my concern, and I'm a realtor and I'm not necessarily living paycheck to paycheck, but I definitely don't have 30 to 40 grand sitting around to get my first rental, or maybe I don't need that. What would you do physically if you got in the weeds with me here for a second and you were coaching me to know exactly how much money I need to put aside, what type of investment property to invest in my first one? What questions do I need to answer for myself?
Well, cash is one of those where it can be you, or it can be you and other people. It can be other people, and you're taking kind of sweat equity ownership of it. So if you have cash, it's a matter of saying, okay, if you're closing 3 or 4 transactions a month, you can do without needing the income from one of them, just put that away until you get to a point where you're able to use that money as your down payment, and you use leverage because there's lots of leverage out there for investor properties that you can use. And by all means, even though rates are where they are, yes, it's expensive on a purchase side, but generally the leverage percent, 65 to 80% of an acquisition price. So you don't need a ton of money to do that. If you're buying $150,000 house, might need 40 grand, maybe even less than that. If you don't have it, you have family and friends and say, hey, look, I'm the professional here. I'll find the property. You put in the money and we'll split it. That's a great way to go, because there's a lot right now. There's a lot more people who have money that are trying to find returns for that money than there are deals. And that's not the way it's been in the last 15, 20 years, where deals were prevalent, but investment money was the hard part to get. Now it's completely flipped. And so we find that we have people constantly coming to us and saying, hey, do you have something we can invest in? We're looking for returns on our money. Stock market scared a lot of people. They're getting better rates in the bank, but finding good return opportunities in real estate and partnering up with a professional like real estate agents is a great way to go. And you don't need a ton of money, or any money for that matter.
That's a great choice of words, like leveraging you're the professional. If you don't have all the cash you want, or you don't want to use your own money, but you have other people who are sitting on something, they're looking at crypto, they're looking at the stock market, they're looking at all the other places where they're not winning.
Right.
And I mean, if you talk to, every billionaire I've ever heard of had real estate, every single one of them. Most millionaires that are in different industries still have real estate. And so if I just love that. I love that, leveraging my own sweat equity if I'm not super confident in my own cash, or if I don't have the cash. Right. I think that's something that's often overlooked.
Yeah. And, you find that it's the hardest time is the first time. So I say friends and family cash is usually the best way to roll. But once you've done it and demonstrated it, then it's a lot easier, because your circle of influence tends to grow. And I'm surprised, and most of these folks on this call will probably have had people say, hey, are there any good investments I can get into or whatever? And you might be, well, I don't know. And that comes down to that limiting belief of, maybe I don't know enough. I don't want to take somebody else's money and potentially lose that as well. But again, you have to dive in somewhere. It could even be where, hey, look, I've got a deal for you and you just pay me a commission on it. And then you can see how that investor did with that property. And you're like, I could have done that. I didn't do that, right? So.
Now, you mentioned earlier one fear, and I'm curious, is this a fear that could be realized? Is it possible to be too leveraged in real estate?
Yeah, we right now are pretty leveraged, and the market changed very, very significantly on some of the investment projects that we're doing. Now we're doing bigger developments. We've got, like an apartment project, and we have a townhome project. And so into the development side of things, which take longer. And a lot of times the financing on those types of projects are typically prime and prime plus and stuff, where that's really moved quite a bit. Mm-hmm. So you do need to sort of balance out your leverage with the economy. And I think that's been a lot easier in past, because we've not really seen this, but with the manipulations that the Fed has done in the last 6 to 8 months, it is significantly problematic. So I think a lot of times you want to be in a position where you're well balanced on your cash versus your leverage, especially when you have income producing assets. Lower leverage is better because you're getting more margin, and if you lose a tenant or, rents somehow change or whatever. But I think, again, the best way to approach it is to come in as conservatively as possible with other people's money, leverage wise. And then, if you get comfortable or you have enough investments to be able to sort of say, this one's not doing particularly well, but these three are, and you have a balance to be able to kind of shift cash around if necessary, you can. But smart to start out.
This brings me to another question I've been pondering as I'm reading about the next. A lot of people thought, hey, it's going to happen again. We've got a bubble. It's going to burst. Most real estate professionals think that's not true. But one thing I've been reading about that seems to have a little bit more validity to it is what's happening in commercial lending. If you have if you look at what's going on, where since 2020, most businesses, not most, but a lot of businesses are realizing that they don't have to come into an office. And what I'm reading about that I think is true, I want to get your thoughts on it, is that these buildings have tenants that are realizing, hey, we don't need this anymore. They're defaulting on their payments because what's going to happen to them? They don't care about it. They don't want to spend 10 grand a month anymore. So they're just leaving, defaulting on that. And now the commercial loans, seems like there's a bubble there. Are you reading anything about that? Are you seeing that?
Well, there's two things, and I'll try to be brief because I could talk forever on these things. Is that there is one of the benefits that we have is we're still in a net deficit of housing. There's just not enough housing for the people that are needing it, and with interest rates going up, where the short-term commercial rates are involved with the construction of housing primarily, right? So what you're going to see, the higher that short-term rates go up, the less new subdivisions are being built, the less product is going to be put on the ground. That's not affecting an owner occupant as much with a mortgage, but construction is going to slow as a result of it costing a lot more to borrow the money to build things. So we're going to start to see the housing deficit get worse, just like I think it did over COVID when everyone shut down. So that's why housing pricing is not particularly going down in many areas, given that rates should be forcing it down. It's because supply is being down. But back to your other point, with office in particular, where people are saying, hey, we're not all going back to work. We're going to work remotely. What I'm seeing a lot of opportunities in is to take some of that office and convert it. We're looking at doing a conversion of a warehouse building in a downtown area and converting it into loft apartments. And so I think a lot of times office may end up being never like it used to be because of this paradigm of being able to work remotely. And so you'll see less office construction probably, but in the interim, some of these buildings that may not be utilized anymore might be going into foreclosure or subsidized in one way. You can maybe convert those into residential product, and that's a way to retool that property into something that's valuable. And there's plenty of demand for that.
Is it tough to get the zoning on that?
Well, you're typically down zoning from an office is a higher level of commercial zoning than residential. So it more comes down to how costly is it to retrofit a building for occupancy, residential occupancy. And that can be very costly. But again, a lot of times you have legacy of development costs and curb cuts and the building construction, which if you were to build from ground up brand new would be so costly. But because the building's already there, retrofitting it into a different use can often be a very good opportunity. And there are people out there in many markets doing that.
Wow. Greg Kurzner is my guest today. Thank you for being on. I learned a lot. I wish we would have gotten more into this tennis and rock band thing. The hobby. It's really important to have hobbies. I mean, as soon as we hopped on, I saw that big old fathead Clemson sign in the back, and we talked a lot about in the pre-show about your hobbies, and I think that's probably, I'm guessing, what keeps you sane in this crazy real estate world where there's a lot of deals going on and you need time to diffuse. What's your in closing? What is your hope to realtors who are looking for that work-life balance and are trying to figure this out? Like, should I get into investing? Is it going to dominate time? Is it going to be 100-hour weeks? What should I do on my off days? Should I have off days? What's your encouragement to those people?
I really feel like that if you can time block and commit to a plan of long-term passive income and wealth by investing in real estate, especially earlier in your career, I think that you will look back at that decision as the most momentous and important one that you can ever make, much more important than how big your company grows or if you're able to exit and sell your business. Because again, I mean, it's not that easy to take a successful business and sell it in the real estate field because it's so driven around the concentric to the person that's growing it. But I think that's the most important thing, which is that if you love selling real estate, you're going to do it until you drop dead, great. But if you don't or want to do other things with your life, to have that financial freedom of a nice portfolio of income producing assets is an important thing to do. And I think if you make that decision, then put a plan together and follow it. And then you'll look back and say, gosh, I'm so glad I did that, because if I started it when I'm 30, when I'm 60, I'm worth so much more, and I can continue to work if I want to, but I don't have to. So I think that's the biggest takeaway.
Absolutely. I want to look back on my career and view that as a decision that changed the course of my ability to spend more time with my friends and family.
Right.
Greg, thanks for being on. Number one in sales and units in Atlanta, Greg Kurzner. We'll see you next time.